How much has Toronto housing price dropped ever since March interest rate increase? Is the decline continuing? Which cities in the GTA fluctuate the most? Hi, my name is Priscilla. I am your real estate broker in GTA. Today, let's take a look together newly available August 2022 Market Watch report.
So like previous months, we use two graphs. The big one is August market performance, and the smaller graph is for one more month ahead in July. So when we compare the big to small, we see months over months change. Together, we study 5 parameters. Under each one of them, the white figure is the year-over-year change for the observation period, August. Let's first take a look at the average sold price across the whole GTA for all property types. And this number arrived 1.07 million in August. And this is a $5,000 increase than last month's July, which is 1.074 million. So 5,000 doesn't seem much, but we really need to notice that this is the first time markets start to come back after 5 consecutive months decline ever since March interest rate increase. Okay, first time the market showed it coming back with a higher average sold price. Okay, then we take a look at the transaction volume. The market is still not very inactive. We only had 5,600 properties sold in August. This is over 1/3 decrease than last year, August. However, this is a big improvement comparing with July, which is almost half the transaction volume than 2021 July. So as the absolute transaction volume, because in July, we only have less than 5,000 sold, and this month is 5,600. So we can see the market is still not very active, but it's becoming warmer, okay, quite obvious. And in terms of supply, we see that the new listing remain the same level as last year, both around 10,500 new properties coming into the market. For quite a few months, the new listing number remain at the same, almost on par as last year. So we don't see many sellers are panicking and try to push their properties to the market and try to get rid of it as soon as possible. We don't see any sign like that. Ever since decline in March, the market didn't show that. However, because the activeness of the market is not very high, and then the new listing did not at least decrease, the total number of available properties for sale is accumulating more and more. We have more than 62% available properties for sale, and now it rises at more than 13,000 properties in the market. So it's a very obvious buyer's market, and the buyers has lots of choices to choose from, which also resulted in longer days on market. So this is 22 days, almost 1 week longer than last August, and also longer than last month's 19 days. I wouldn't say 22 days is a very long time, as 22 days, around 20 days is about the normal market's length for average property to be bought by a buyer. However, this is much longer, almost 3 times longer than early this year when the market was in a frenzy status. At that time, we saw like 8 days, 9 days, days on market. Okay, so basically we're still in a buyer's market, but there's another thing we also changed because of the activeness of the market regain a little bit heat. We can see the months of inventory also dropped from last month's 3.1 to this month's 2.4. Once again, months of inventory means that carrying on this month's sales speed, it will take market 24 months to sell out, to deplete all the inventory available properties in the market. So the decline from July's 3.1% and June's 2.5%, we can once again see that the market is warmer. The inventory is not as much as before. So we can sense that the market is regaining some strength.
To have a holistic view, let's take a look at the GTA housing price trend during pandemic.
So we are looking at the data right after pandemic breakout in 2020 March, when the market entered into lockdown, until last month, August 2022. So in this 2.5 year period of time, we see the average sold price across the whole GTA, all property types. We can see right until February this year, the price showed a very strong upgoing line. So this is due to the easy money policy, very low interest rate. But ever since March this year, we announced several times of interest rate raise. So we can see that after we hit the peak at 1.33 million in February this year, we come down to 1.079 million in August. So from this peak, after 5 consecutive months decline, the market already dropped 20%. It's quite steep, isn't it? Let's not forget, when we look at the August number, it's actually a bit better than July. This is the first time after 5 months decline, the market shows that it actually coming back. So not only that, if we compare to the same period last year, we realize even though this 5 months decline wiped out a lot of growth from the end of last year and earlier this year, it still has a little bit leftover increase over last year, which is actually 0.9% increase over last year. Okay, and if we push back, if we don't just compare with last year, how about we compare with 2 years ago, which is 2020 August? We will see at that time, the average sold price was 951,000. So if we compare that number to today, we still realize 13.5% increase. So no matter it goes up and down, in overall 2-year time, the market went up 13.5%. Is it a big increase or not? I left this judgment for yourself.
So we just saw Toronto housing price fluctuate like a roller coaster during pandemic. But what is a normal year's average annual growth? Today, I'd like to introduce one calculation method.
So here's how we find the average annual growth for the years before pandemic. So we are looking at the data starting from March 2020, all the way back 5 years to 2015 March. So what we did is we take this 2015 March data and divide it to 2020 March average sold price. And then we find the fifth root of this result. And then we get the average annual growth for a normal market to be 8%. So if there's no money easy policy, low interest rate, or extremely high interest rate, the average normal market growth, we remember this number to be 8. That's how the market reality is before pandemic. Okay, let's remember the 8% as the annual growth rate. And then if we plug the annual growth rate of 8%, 2020 March, and project its growth till today, that's what this line is revealing. Very interestingly, you will find this number actually crossed just about July this year. You do see the market performed above its average starting from February 2021. And you see actually the market was in a frenzy status for quite some time. But ever since the interest rates start to rise, the market really made its adjustment and it come back. I shouldn't say that's where the normal market should be, but that's where our projection lie if it's a normal year. So I think this is a very interesting graph. It tells us how the market performed and how if the market was in a normal condition. So I think here, when the two line really crossed, you can then draw your own conclusion. Are we in a reasonable market now? Earlier in this video, we talked about the whole GTA has declined around 20% ever since this year's peak in February, right? So here I choose several cities across GTA. Their individual housing market performance during pandemic. So I choose Richmond Hill Markham from north, Mississauga in the west, and Oshawa in the east. So we can all see similar trend. They all decline from their own peak in February, March. But the decline degree is different. So we can see Richmond Hill Markham is around 15, 18%. Mississauga is relatively moderate, 12%. But Oshawa is quite obvious. It's around close to 1/3. So some are lower than average 20%, some are much higher. So from this comparison against the 20% decline across the whole GTA, you get the sense which cities fluctuation is more drastic. But what I really want to point out in this chart is that if we look at all these 4 cities, they all showed the bouncing back trend in August comparing with July. Markham is like this. Mississauga is moderate, but you can still see. And Oshawa is also very obvious. Richmond Hill is not, but that's because in July, there's already a huge jump back comparing with June. So now we see our whole GTA's real price against our projection and each individual's performance month over month in August over July. So I leave this information for you to draw your own conclusion. Has the market finished its adjustment? Are we in the reasonable price now? Especially, don't forget, yesterday we had another interest rate raise at 0.75%. So this is the end of this video. Looking forward to connecting with you soon. Bye-bye.